Welcome traders. In this video we're going to go over ZoneTrader Pro's newest indicator, the Cumulative Delta Divergence Indicator. What we're going to do here is we're going to look at two of the charts that I've put this on, and the charts are live so you will see the indicator moving in real time. But first let's look at how we're going to set up the charts. Basically I have two charts in front of me, the 150 tick chart and the 500 tick chart. And I'm going to show you a new way to use this, but let's start with the beginning. Okay, first what we want to do is whenever we are using the delta strength or the cumulative delta indicator, we have to make sure that the tick replay option is engaged. Without tick replay being there, neither of these indicators are going to work. The second thing I want to do is the top of the screen where the price is, that's pretty uninteresting to me. So what I do is I make this intentionally large. I make these intentionally large so that I can see the slope of these lines. In other videos, I've also had the cumulative delta on the chart tracking traders between 1 and 7 contracts. However, because of the scaling difference when they are on the charts, I personally now am not doing that. And all I'm doing here is tracking traders that are submitting orders of 25 or greater. So to set that up on the 150 tick chart, first we have the zigzag ZTP indicator, and that needs to show a deviation points of 1.25. We have the ZoneTrader Pro indicator, which needs to show the zigzag ticks of 5. We have delta divergence on here, and that needs to show either points or deviation value of 1.25, the same as the zigzag ZTP. And I'm going to come back to the delta strength and why that's important on this chart later, but for now I'm hiding that. On the 500 tick chart, what I have are the same values, except I put zigzag ticks in here at 10, the zigzag ZTP at 2.5. Again, the delta strength is hidden for now, and the ZTP delta divergence is set at 2.5. Deviation contracts of 1 and key points of 4. Now, what the delta deviation means is that if you set this to a higher number, you are looking for divergences of at least that number of contracts. So by setting this at 1, you are basically going to find any divergence, whether it's 1 contract or 1,000. And then what I'm doing is I am unchecking zigzag, because when the zigzag occurs in the current bar, which I will show you, that seems to get written over and we don't see it as clearly. So those are the options that I'm going with here. I am then checking reconstruct tape, min filter of 25 and max filter of 2000. You notice that we do not need the ZTP cumulative on the chart because the delta divergence indicator is doing exactly that same thing, except it's also showing divergence. So why make the computer think harder than it actually has to? Okay, on this live chart, what I would like to point out is that just because you have a bearish divergence here, as price traded all the way from the low of 27.64 to a high of 27.73, just because it's showing you bearish divergence, that is not the reason for the trade. Basically, what you are doing is you are seeing that there is bearish divergence. Okay, now in this case, maybe it was a good idea to be taking the exhaustion trade up here, but very shortly I'm going to show you why I was actually long from back here with a price of 27.67, and I cleared the trade right here at 27.71. And I'm going to show you why I did that against this very bearish setup that the divergence indicator was showing me. So now what I'm going to do is I'm going to put the delta strength indicator back on, and I am filtering for contracts of 100 or more. And all of a sudden we see all these green dots and red dots on the chart, and you're like, well, that's a lot of information. Why do I need to see this? Well, this is super important information because all of these green dots down here are reflecting orders of 100 contracts or more. And that is super important to me. And if we see this spread out, what this is saying is that from this point forward, where I just drew this horizontal line, and let's change that to just some kind of different color other than red. From this point forward, this is where the indicator would have started to print. Now that this indicator is printing and telling us there's a bearish divergence, well, what I really care about is what people are doing with their actual money. And as we can see back here, somebody started betting real big, real hard as the market came down and hit 27.64. This is important to me because this is the actual support that's going to move a market higher. So all of these contracts, there's a couple thousand contracts here, a couple thousand contracts here. Well, this is all telling me to get long. The first real resistance didn't come in until we were actually up here at 27.71, which is coincidentally where I exited the trade. It actually came in right here at 27.70. I saw that coming in, and I immediately became a little worried, and I was watching the cumulative delta falling on that. However, I stayed with it and got my target filled of 71. And then just as I'm getting my target filled of 71, you can see that this really big trader came in here with an order of over 700 contracts. Now, when we're looking at this, it's basically a preponderance of the evidence of what we are seeing now. Well, here we saw nothing but buying on the way up. And not until we reached the exhaustion trade up here did we start seeing a lot of selling going on. And notice up here that, again, there was a lot of buying that took us higher. But after that buying was over, there's another 1,500 contracts that came in and then took us down. Now, this is happening not in a vacuum, but it's happening at a known price pattern, which is an exhaustion price pattern. We got that because we reversed from minor back here, and we expected that because from all the way back at 27.64, we traded into a strong trend reversal. A strong trend reversal goes blue zone to blue zone, retraces back to minor, then trades into an exhaustion pattern. Now, anybody that's watched a few of my videos knows that this area right here is considered high risk to take any type of short trade. So this is, we should be ignoring this completely as an opportunity to trade. The reason that we're ignoring this is because of the strong trend pattern. The market does exactly what it's supposed to do. It only comes back 2 points to the minor support, and then the trend resumes. Now you understand the reason that price patterns are just so important when understanding risk and reward. And you also understand why I put the delta strength on here, which, yes, it does clutter up the charts, but it gives you real-time information that is really the most need-to-know information that you're going to have on this chart. When you can see back here that several hundred contracts and then several thousand contracts are being bought right here, well, that's going to give you an expectation of the market going higher. And that is what I want to see when I'm setting a target, and that's what's informing my decision where I get out at. Now, as we open up the chart again and we see that there was significant strength coming in here to the downside, well, again, if we were to take a trade from there, because this is being high risk, first off, you can see that we first traded higher because we were in a strong trend, and then we traded even higher into the exhaustion pattern. That's really where I want to be interested to getting into a short trade, because with this short trade, what we've done is we've traded into a reversal pattern. We have seen that there's been considerable resistance up here, and then what we do is we trade into a trend trade here, which is what I define as a high-risk trend trade, and then we trade into a reversal pattern right here. And exactly where we are expecting to see a reversal pattern, look at what the cumulative delta is telling us. All the way from back here, the cumulative delta is selling hard. Now, if that isn't the easiest trade of the day that was good for 6 points, I don't know what is. The next thing I want to do is I want to put the delta strength back on the 150 tick chart, and this time I'm filtering it for a value of 50. And again, we have a lot of information on the chart, but it's a lot of need to know information if you're going to be making a trade. So let's look at this back here at 1042, the entry that went ahead and tested the high back here that we just had been looking at. Here we have our exhaustion pattern, and right where we are expecting to see resistance, that is where we have a 300 lot order coming through and giving us some support that, yeah, we probably should be short from here. Now, to use this with the divergence indicator, what we're going to be looking at is, again, we're going to be looking at the same things. Note the line here coming back every time. That what happens is every time we touch a resistance zone, we have a sell-off. Now, what I am interested in is I'm interested in just when we are in a bearish divergence and now we're trading at a zone such as this right here, and we then find orders coming in to support that sale. Again, right here. Again, right there. Look at the long trade right here that was signaled the long reversal trade, and exactly where we are expecting to see support. Well, the delta strength is giving us those numbers, and it's not telling us that anybody is selling immediately after this trade. Well, that then is good for another 4 points, and again, probably one of the easiest trades we can have. Here we have the bearish divergence, and immediately right at the apex where we're getting this bearish divergence, we are getting the delta strength sell signals. Again, here. Again, here. Now, these are not all trades in and of themselves, because what we have to take into account is what is happening on the big chart. So here's what's happening on the big chart. Well, exactly where you're getting a bearish divergence here, if we look at the 150 tick chart, well, no, that's not where we want to be taking the trade. Yes, we are seeing significant delta strength selling, but we have a divergence here. Here, we have an exhaustion pattern. So we now don't have any high risk there. We have this divergence from this point right here. So then we see the 300 lot order come through, and we're good. That's a great trade. We move it forward to exactly where the reversal trade is. And again, we are divergent on both charts, and we have delta strength on both charts, taking us down for that 5-point trade. But one of the coolest things that I have seen with this indicator, and why this indicator is just tremendously valuable, is when we have a bearish divergence from this point here into this trade right here. The market had been selling off the entire time, which we could see in the cumulative delta, and as price was trading higher, well, the large lot traders were selling it. And that is just something that I love to see in this type of situation. So we can see these on a smaller time frame, we can see these on a larger time frame. And when they occur together, then we have legitimate trades that we can consider. Okay, another way we can use the delta strength and the divergence indicator is by putting this on a 250 tick chart. I have put the delta strength at 50. So again, you're going to see this and you're going to look at it and you're going to say, wow, there's a lot of stuff on this chart. But that's really not the case. What we need to do is we need to expand this so that we're only looking at the areas that we are interested in. And when we expand this to the areas we're interested in, well, look at what we see. Well, initially, here's a great trade that is currently in progress that started about 11:20 this morning. And here we have an exhaustion tick divergence trade. Now, there is no divergence here on this chart or the 500 tick chart, but the 500 tick chart was also giving us an exhaustion pattern, which is a reversal pattern. And it's also coming at an area that is super important, and why the delta strength is important to put on your chart. So the price where this kicked off at was 27.63. Now I'm taking this back to the beginning of the morning, and do you see anything happening after the initial selling on whatever this news was that was pre-market? Do you see anything happening around the price of 27.63 with the delta strength? Of course you do. You see nothing but delta strength buying here at 27.63, and you see nothing but the cumulative delta rising at this point. And this is the reason, again, why this is valuable information and information that you need to know. Here we traded into a trend trade, and we see nothing but a huge amount of buying that's going on down here. The selling that was going on up here, there was a fight going on between the buyers and the sellers, but the cumulative delta had been rising this entire time, and those sellers are going to be the ones that are going to get taken out. So just another reason why these are valuable numbers on a chart and how you can use them. But back to the 250 tick chart, as we were talking about down here, at exactly where you're supposed to see this pattern, even before order flow develops, you can see just hundreds and hundreds of contracts coming in, and that kicks off this trade. Again, here we're at this exhaustion pattern right here, and we have bearish divergence. Well, exactly where we're supposed to see that trade pattern come in, that's where we see the delta strength. So everything that's happening back here is relevant, but it's not necessarily relevant to whether you're making a trading decision right here. If you were making a trading decision right here, one of the things that I would look at, though, is I would look at all the support that occurred back here, and it all occurred back here at a price of 27.65 or lower, but that would also give me some idea why the market is going to stop here at 27.65 if I am getting in here at 27.68. So that's basically how we're going to use these two indicators together. And to also reiterate another point, when we are in a strong trend trade, such as we are right here, well, we don't really care if there's bearish divergence here. Here, we are in an exhaustion pattern, which is bearishly divergent, and we're getting the sell signal. So this is a safe area to sell from. Again, when we come up here to test this high, this is when we have, again, a bearish divergence, and we have a significant amount of sellers coming in, all right in here, and that's going to take the market down 3 points. Again, we go back, look a little earlier in the day, and we just see this huge amount of buying coming off this trend trade right here, leading us into this strong trend. A few patterns from yesterday. Here we see we're trading up against resistance, we're bearishly divergent, and then we see several hundred contracts coming in exactly where we are supposed to. In looking at this pattern right here, we formed a strong trend. The market did exactly what it was supposed to do, actually continued in a strong trend, and then traded through this intermediate zone. Well, again, if you've watched the video on high-risk trading situations, you would know that we wouldn't want to be trading inside anything of here. So even though we were bearishly divergent and we did have selling come in, what is the risk and what is the reward? Well, the reward out of this was only 5 or 6 ticks to right here, because the market was going to do the pattern that it was exactly supposed to do and then entered an exhaustion pattern. Now, if you had waited for the exhaustion pattern and the selling to come in here, well, you were never underwater and you entered a... Here again, here's the pattern that I just really love to see come on, is when we go from this point to this point and we have a bullish divergence. Here we have a bullish divergence with the delta strength coming in, and a second bullish divergence, again with delta strength coming in, and that gives us another 3-4 point trade. Here's just the opposite, where we had been in a multiple bearish divergence trade, and we can see that exactly where we had hit the high, we had the delta strength come in with some significant selling. However, the market only traded down a small amount and then traded into an exhaustion trade where, again, right at the apex, we got that delta selling again. The last thing that I'd like to note is, starting at this point here in the morning, we were signaling bearish divergences, and we were signaling those bearish divergences all the way up. And this is why I said at the beginning of the video, just because we're seeing a bearish divergence does not mean that that's a reason to trade. We only want to be trading at known trading patterns where we have that bearish divergence. So as we traded from here all the way to here, that isn't a trade. However, what is a trade is once we've traded into this exhaustion pattern right here, and then we see this ton, just absolute ton of contracts coming in here, well, we have all day to get short for that 3.5 point trade. So just be aware that just because we're seeing a divergence, what is actually happening is it's the small lot contracts that are taking this higher, and probably a combination of the large lot traders just allowing it to rise without giving any limit order resistance. So that's probably what is happening here and the explanation for that. So just be aware that we can see bearish divergences in a rising market and bullish divergences in a falling market. We need to combine that with all of our other tools when deciding whether or not to take a trade. I also just want to take care of one quick housekeeping issue. Make sure that your NinjaTrader is updated to the latest version. Currently we're on version 17.1. Anybody that hasn't updated their NinjaTrader 8 version is going to get this set of errors, which I get this probably about twice a week from new customers. And this set of errors is due to that they're using an extremely old version of NinjaTrader. So just be aware that if you get something called a wise man alligator from assembly error, that this is coming just because you haven't gone and updated your Ninja. To update the Ninja, obviously go to your help menu that's here and do a download for the most current version. You should also check see that you are currently using the 17 version. The next little housekeeping item is please make sure that you go to the blog, and on the blog make sure you sign up for email notifications here. Very important, because this is how you will know when indicators are going to be released or when new information is being put out. ZoneTrader Pro Order Flow Software YouTube channel, and subscribe down here so that you're notified when new videos are released. Very important that you get that information. When I post a new video, what I will do is I will put it in two places. I will make a blog entry, and I will also put it on the video library support page. But you'll get faster notifications if you have this subscribed to down in here. I'd like to thank you for watching, and if you should have any questions, please be sure to let me know. Thanks, and have a good trading day.